The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, as you just heard, and it's the Friday edition, the July 6th edition. January, March, everybody. Half a year is gone, or just about to go. Oh, gone. Half a year is gone. We're into the second half of the year. How time flies. All right, so let's go. Thank you, Steve, for 2 great hours. And, of course, on Monday, Tom O'Brien will be back. Mr. Sailor himself will be right back here in the chair, and he'll be joining Steve and doing his final 4 o'clock to 6 o'clock wrap-up time. And I'm sure it was just a really well-earned break that he had, and he enjoyed it immensely, and it'll be good to have him back. So let's just look at the story as we see it unfolding here. Today's Technical Friday. What I'm going to do is going to go through some of the indexes. I'm going to go through them very carefully in this first segment of the show. What I want to do is just to demonstrate for you the power of the notation of the ChapmanWave, the simplicity of peak A, B, C, and D, and then where we can look at after D if there is a sharp pullback for the support levels, etc. Remember, if you're looking at Tiger 1, if you're looking at Tiger TV right now, I think it's Tiger 1. My shows are archived in Tiger 11. The left side chart right here, this left side chart, that always has the daily chart time frame. The middle one has the weekly, and the right one has the monthly. Then I grab this one and I show you the 120-minute chart with that resistance area that we're looking at in this particular instance. So here we go. The Dow is down 149 at 12,747, having made a new recovery high yesterday of 12,961. But if you go from the low bar of 12,035 on the 4th, was it? The 4th of June, it's real simple, because in the ChapmanWave what we look for are successively higher peaks, especially if the technicals are confirming that there's a buy mode in place. And even if, as at peak C at 12,898, there's a sharp pullback, as long as certain levels are holding and your technicals are reasonably good, there's a chance that you could still bounce and make that requisite leg D up to complete a buy mode. When I say complete a buy mode, I mean the expression buy signal goes to buy mode, confirming that you should get in the ChapmanWave at least a peak D. But after that, there are other things that can happen. You can get an extension of peak D. You can go to E, F, and even G. You can get a recycle. That's an instant restart. They're 2 separate things. You can get an instant restart, which immediately within 3 bars, 2 to 3 bars, breaks out and starts a brand new, not just leg E and F, but a brand new buy signal that takes you up at least another 4 peaks. That's an incredible forward-looking technique. Now, at peak D, remember I mentioned the other day 13,333 was the previous top, May the 1st at 13,338. My late parents' anniversary. And that's when you saw the market pull back sharply to the 12,035 low. Now what we've done is we've gone peak ABC at 12,898, pull back to the 200 period moving average. Let me make this a little wider so you can see what I'm talking about. See that purpley blue line or dark gray line, whatever it is on your screen? Mine's just like kind of a mauvey color. That was very strong resistance, but then became tremendous support. So on a worst case basis, if the selling continues into next week, 12,500 is going to be critical, because if it closes under that level, we're in a deep sell mode, going to retest the lows of 12,035. If 12,000 goes in July, all bets are off for this market to recover quickly. Just make it real simple. Now let's go to the upside. So that's peak D being established today. I cannot see a 12,962 close today, Friday, a quiet day in the summer, to break and extend the leg to go to leg E up. So I'm calling this a very strong potential for a peak D. But the MACD is still very strong. It's turning down in the yellow line, fast moving average. And the stochastic turned down sharply. Remember on Tom's show last night, said the quicker that the stochastic turns down, if it was to break underneath 80%, that would be a negative. But so far it's pulling back and it's still at 90%. The day's not yet closed. The longer the day goes on like this, the sharper that you'll start to see the pullback. But so far it's holding real well. I have to consider that thus far, this is just a peak D pullback. I haven't even got a sell signal yet because the stochastic hasn't broken down and the MACD not crossed negative. So far, it's just a pullback. It's a very disappointing pullback if you're a bull, because you would have liked it to have gone higher into the 13,000s and then pull back, because it would have said any pullback should be a minor pullback, because that target of 13,338 is just so powerful. But look at my left side, right side price time match that we had here from the cluster pattern at about 12,931. We just nominally went above it yesterday, 12,961. It wasn't a day, it was extended by a day. The left side, right side price time match. And we'll see if the Dow closes under the 9-period exponential moving average, which is around about 12,770. Right now it's at 12,743. I'm going to quickly, because I said I'd do it last night, and then I realized afterwards I ran out of time. I want to look at the weekly chart. The weekly chart is in a retracement failure mode. That all it does is explain. It doesn't say it's failing. What it says is, until it breaks to a brand new recovery high significantly above the 13,338 previous high, it's just a retracement that could fail at any point. And look at the stochastic and MACD. They are very poor right now. So in the assessment, I have to wait till 4 o'clock this afternoon. But if the assessment at 4 o'clock is that the Dow closes somewhere between minus 135 and 175, rather than having a big snapback right at the last hour to only close down 45 points or 47 points, at this particular point, I have to say, bonds are rallying very nicely. We'll get into that in a moment. The dollar is up very strong. Remember, last night I was talking about, when I did Thomas' show in the 5 o'clock hour, and then again on Tuesday when I was on for my regular show. Oh, Tuesday I was on with Steve, that's right. I was discussing the volatility index. So there's a bunch of things I need to get to. Let me just run the numbers now. The weekly chart so far, retracement failure mode, until the Dow can get into the 13,100 area. There's a good chance that the weekly chart, if we close a week from Friday, a week from today, decisively underneath the candle of last week of 12,450, that'll be a big negative. That'll be that dreaded H failure pattern. So far I don't have that. I just have lousy technicals with the price moving up, and the MACD is just barely trying to flatten out and not cross positive. So that's still down. Now let's go to the monthly chart. My concern is that we've got, oh boy, you're going to be able to see this. I don't really like to take all this notation away. It's really important to my subscribers to be able to see that. You notice that we made a new recovery high in May, and at the same time the stochastic and the MACD were actually quite a bit lower, or at least were acting weaker than how strong they were when it made the 12,876 high back in April, back in May of last year. So what I have to say is, if this is a peak E, upside from here on should be limited, and we should start to make lower lows and lower highs. It's just real simple on the monthly. For the monthly, the July, to act really well, you need to see by the second week, that'll be by next week, by a week from Friday, you really need to see the Dow in the 13,100s or higher. So those are my parameters. Now, as far as my subscribers are concerned, we have 3 short positions. I really tried desperately to get long positions this week. They ran away from us. They went up. I will assess over the weekend if those long positions are still potentially long positions. They've actually held pretty darn well today. And that says to me, okay, keep them on your focus list, because the stocks that you've liked are still acting quite well, and the stocks that you've been very negative on are still acting very poorly. So let's keep it that way. It's a bifurcated market. So now let me just run to the stochastic, to the S&P, SPX.X. I don't want to run out of time. 877-927-6648. Love to take your calls, either in this coming segment or the next segment. But here's the S&P. Peak D was confirmed yesterday, and today, if the S&P closes below 1353, it's at 1352.22, down 15 right now. If it closes below that, that'll set in place a negative close based on the 9-period exponential moving average, which says it's just the start of a sell signal. I will only get the sell signal confirmed if it closes decisively at the end of the day below the 9-period exponential moving average. But what I'm looking at is the MACD, like the Dow, the MACD, the stochastic is still okay. But the V-shaped pattern, the Groucho Marx pattern that I'm looking at in the stochastic says, whoa, be careful. Because if the S&P continues lower and at any point next week takes out 1342 to 1340, then we've made our rally, this counter-trend rally. And the S&P says that the weekly chart is failing to confirm technically, and that it closed a week from Friday below 1343. Let's call it 1342 on the 9-period exponential moving average, especially if it's below last week's low of 1309. That's very negative action. What would be positive? Holding above the 9 EMA in the weekly as it's doing right now. The monthly chart is in E. Peak E. I'll have to change that if we go decisively above 1370. But right now, all I'm looking at, not 1370, it would be 13. That wouldn't be 13. It would be 1422.38. Sorry. If it goes decisively above that in July, that's really positive. But at this particular point, what I'm going to do is I'm going to grab a chart that I'd like you to see. This particular chart is the monthly chart. No technical indicators other than straight lines. Channel lines. If you learn how to use channel lines, it can really help you. And if you look at the S&P, from 1994, from the 435 low all the way to the 1552, threefold increase to March of 2000, look at that beautiful channel, up channel. Then you came down in a beautiful down channel to 768 to October 2002. You ran back up in a beautiful up channel. This symmetry this is human nature. And that human nature says that we can get a little bit nervous, but each time we get nervous within a bull context, within a rising tide, that will have higher lows and higher highs. That's really what it's saying. You get the same kind of degrees of nervousness and ebullience to the upside. But if the tide is moving up, you know how if the tide is moving up, the boats that are on the water, or the floats that are on the water, all move up. They can bounce up and down, but they're all moving up. When the tide is going down, I'm waving my hands here, no matter how much you bounce up and down, you're still making lower highs and lower lows. That's essentially the core here, because from the high of October of 2007, you plunged down to 666, low of March of 2009. Now look at this beautiful up channel, and you are still being contained. And as long as the S&P can hold on the shorter term above 13, let's call it 1320, that means you're in this up channel. When you break, you've got to be careful, because taking out the low of last month, 1266.74, that'll be very negative. That'll take you down to 1212. I'll be right back. Basil Chapman, 877.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. Just like that, another month has passed, and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. Thanks so much, and good trading.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and 877-927-6648 is the number to call. Let me just run the numbers because I haven't run the numbers yet. The Dow's down 160 at 12,735. The S&P is down. Did I get that right? The S&P is down 15.81 at 1351. The comp index is down 44.29.32. Yesterday it held much better than the others, and today it's kind of the same percentage range, actually a little bit more on the way down. The gold is down. The GLD is down 173 at 153.95. You know, I just keep saying I don't see anything in gold. I think we can just quietly make lower highs, lower lows. The crude oil is down 277 at 84.44. Silver is down. Let's see. So gold itself is down 390. Is that right? 390 at 1605. Can that? No, it can't be right. Silver's down 7 cents. Wait, let me just look at the GC. GCQ 12. Of course, I missed the number. Yeah, it's down only 21.70. It's down 21. I thought that was wrong. There it is. You can see it in the weekly chart. It's making this declining triangle, lower highs and lower lows, and much sharper lower highs and lower lows. And I keep saying this at gc.p, and then we're going to go to our callers. That peak F in the monthly chart it's formidable. Don't ever fight a peak F in the ChapmanWave if you've got your technicals going down as well. And that's all I can say. When gold closes under 1537 to 1540, 1537 area, it's going to be a real quick and sudden drop. I have a time price match in the GLD going to late July, end of sometime middle of August, about August the 12th. Between 141 and 137. 139 is the actual level that I'm looking at. It might happen real quickly, or it could just be slow. I don't know, but so far, it's just a sideways move, and I just don't see anything there. Just real quickly, let me go to the TLT, and then I want to go to our first caller, and we've got the TLT is actually just in the sideways trading band, and until the TLT really breaks decisively above 127.50, and right now it's at 127.01, I have to consider that rectangle, that H formation that can form an M, is still potent. But what happens in this pattern is if the downside tests are starting to build strength, and you can see the stochastics now much higher than it was before in the previous low, and the MACD is trying to turn up here, the fast-moving average. If the TLT breaks above 17, if it breaks into the 128 area, that previous high of 130.38 in the rectangle formation becomes a magnet. So that's what I want you to look at. And now we're going to go to our first caller. We've got Freeman in Dallas. Hi, Freeman. How are you?
Hey, Basil, how you doing today?
Very well, thank you.
Hey, Basil, today I shorted Alaska in 3 phases. I'm in at an average of 38.01. The reason why I shorted it, I saw the slow stochastic at 99.5, and I thought like that was it was too pushed to the upside. So I was trying to get in for like a quick turnaround. So, but it never wasn't actually, it didn't go under my price that I shot it at 38.01. Would you hold this for long, or you would actually get
I'm just finishing some work on the 120-minute chart. It'll take, as you know, it'll take me just a moment here. There's A. Let me just get this right. So that's peak A, B, C. Is that a D? Oh, okay. So, folks, we're looking at 35.50. Okay, that is A. Okay, we're looking at Alaska Air. ALK is the symbol, and the irony of this whole thing is that 36.39, 36.01. So that's C, D, and this is E and F. Wow. Okay, this is going to be fascinating to watch. Let me explain why, folks. Under these circumstances, when the market is down so sharply, 1.2%, 1.3%, 1.4%. You would anticipate in the history of the market as we've known it forever is that the transportation, especially the airlines, will be down sharply. But wait a minute. What's going on here? You've got the key ingredient. It's that little watery stuff. It's that stuff that is very important to our existence. At least our existence, not quite as much as water, but our existence as an economic, viable society. And that's called United States Oil Fund, the crude oil. And that crude oil has just been, it's had a terrible, terrible slide. And that slide in the monthly chart looks very much like the H pattern I always talk about. And because crude oil is now down at the CLN, I think we're going to look at the CLN, the July crude oil. Is that what we're looking at, July crude oil? Probably not. But anyway, I've got, anybody can help me? What are we looking at? CLQ maybe? Let me look at the CLQ. Yeah, all right, CLQ is trading at 84.64. That is helping the airlines. So what I'm going to do in the break, I'm going to grab a couple of airlines, put them together. I'm going to look at the XAL index, and I'll come back and I'll tell you. Meantime, you know where your stop is, right? It's just above the day's high so far, correct?
Actually put it at 38.78.
Okay, great. We'll be back straight after this.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman here, just real quickly, there we go. Okay, so what we're looking at here is Alaska, and we're on with Freeman in Dallas. I'm sure a lot of people are thinking about this. What's with the airlines? And this is what I'm looking at, and what happened was, I have to make a change here. I'm going to do it real quickly. That is a phantom peak. So that's A, B, C, D. Got it. Okay, I knew I could get this so that it was fit of the ChapmanWave methodology instead of doing it quickly. Yes, so what I'm looking at here as far as the chart is concerned, the extension that we just had to the upside in Alaska Air in the 120-minute chart, all the criteria that I'd be looking for to say that it's made at least a near-term, I can't even call it a short-term top, I have to call it a near-term top, and I'll explain why. There are the criteria for at least the 120-minute chart pulling back to maybe 37.50 to even 37.30. All of those factors are in place for it to do it now. But my left side, right side price time match in the weekly chart says that there is also a chance, let me just do this, that next week, here we go, let me just finish this up. Those of you looking at my charts on Tiger TV, you will see that there's a certain pattern that I look for. Okay, what we're looking at is that next week or the following week, there could be a rally that takes it to the 39.76 high as a test. One of the reasons why I'm saying that is that, and I haven't been able to do so that's B, that's C, that's D, that's A, B, C. I'm doing the monthly chart now. the monthly chart said that there could in fact be a rally to just above the 39.76 level, and then you've got to be very careful. So on a very short-term basis, I think your timing is very good, but you will only know by the end of the day, because if Alaska Air, which is trading at 38.06, closes the session at 37, let's call it 37.92 instead of 38.12 or 38.22, then all of a sudden you're looking at a situation that even if there was a big pop-up and my short-term Chapman gauge trend indicator says that there could be a counter-trend rally at some point within either today or tomorrow or Monday, if this will be the first time it's failed, if it doesn't work in a long time. If there is a counter-trend bounce because of Sunday night futures opening up higher, who knows, right? You have got a nice cushion, because at 37.92, if it bounces, it's probably not going to bounce more than, say, 23 cents or 28 cents. So you're looking good. So what did you say your buy stop was? 38 what?
Average of 38.01.
That's your average?
Yes, 38.01.
Yeah, but where would your buy stop be? Where would you cover it?
I put my cover like 38.72.
Oh, as far as that, I don't think you need to do that, because I suspect that if it goes even 1 penny above 38.46, then the chances are high that it wants to actually climb to the 39.76 high of the week of the 3rd of February. So I'd make my buy stop a little bit tighter on at least part of your position.
Got you. I'll do that.
But you're right in looking at the short term as being extended, but the stochastics at 89%. But not yet crossing negative, and it's going to take it quite a while to get down to 79. It means that Alaska Air would have to drop probably to the 36.10 to the 35.90 area for the stochastic to plunge down to 79%. So I still see strength, and the strength is coming only not because of the economy, it's becoming because of oil prices. They have got a huge discount now because of the oil prices. This is the first time that they've been able to nickel and dime us for everything on the airline. Every month they're looking for something new to charge for. They never did this before. They've got a new metric that they will not go back to for a long time. It's going to take a really bad economy where no one's flying for them to go back to giving all the perks that they did before. So this is their moment, so they're going to squeeze it for all they can get. But Alaska Air has been one of the very best airlines chart-wise, and it looks to me that historically there's a good chance that it wants to either get real close to 39.76, the double top, or if it smashes through and goes to 41, that'll be very impressive. But we're getting real close to the area where the risk-reward for shorting will start to improve, because if it's repelled at that previous high, you've got yourself a double top. So thank you so much for calling, Freeman.
Hey, thank you, Basil. I appreciate that.
It's my pleasure. Let's go to Chris in San Antonio, Texas. Hi, Chris. How are you?
I'm doing fine, Basil. How are you doing?
I'm very well, thank you.
Hey, Basil, could you look at Ford Motor Company on a 2-year weekly chart?
Okay, my pleasure. We've got Ford. The symbol is F. It's trading at $9.44. And I was asked about a weekly chart going back. And as you know, in my charts, what I do is I go back to the start of the chart. Actually, I've lost a whole chunk of charts. I don't know where they are. They're somewhere in my system. I don't know what happened. It's really upsetting. But you know what? I find that going back to the charts, I look at it fresh. It's not a big deal. It takes me no more than 3 to 4 minutes to do the entire chart, monthly, weekly, and daily, going back at least a good period of time. Now, do you have a position in Ford?
No, but it looks to me like it's a dreaded H, and I was wondering, should I go ahead and try to buy it when it goes back and finally tests the low?
The low of $9.05. You're talking about the left side low of October, the week of the 7th of October?
Right.
Yeah. So you know what I'm going to recommend? I'm going to recommend, as just in terms of money management, because we know that the $9.05 low hasn't been hasn't been reached in all the rallies and pullbacks since it made that low back in October of last year. You ran up and then you came down to 975. Then you ran up all the way to 1304 and you came down to 996 and you tried to rally and now you're down to 933. I tell you why I'm really worried about what's going on. On the one hand, and yet on the other hand, the RTH, the REITs, the retail S&P Retail Select Index was at all-time highs. So there's a big dichotomy going on, and if you look at the auto parts, they are doing terribly. So my thinking was, if the auto parts, and I spoke to Steve about this just the other day when we were on together. I said, Steve, it's ironic that the auto parts had done fantastically because people were buying and keeping their cars longer than ever. Then you would expect when the auto parts gave monthly sell signals, which they're starting to give, that either everything's going to go down together, and this is the thing I'm really concerned about because they've been the best winners, them and the restaurants and the apparel sectors, those are the discretionary areas, have had fantastic moves to the upside. So now I'm saying on the big ticket items, they should be doing very well, and the sales, domestic sales, are actually improving. But Ford is handicapped by foreign sales. I think that's a big handicap, and it's ironic that Ford. When I looked at, I was just recently on the road going down to the Cape, and I kept looking, and I kept seeing these Ford Focuses. There are a lot of cars that when I look at the label, I see they Ford products. And the Cadillac, there are so many people, young people now driving Cadillac, especially the Cadillac wagon and the Cadillac STX, I think it's called. Something is wrong with this picture because we should be seeing these domestic auto companies doing really well, and something's going on and they are not. It's almost like I'm looking at the jobs report right here in the auto sector. So this is my recommendation. Because of the money management part, if it gets to $9.15, $9, $8.97, I think you can tiptoe in. I see, as I say, in terms of money management and the pattern that I call the dreaded H, when it closes decisively below the H, invariably, unless it continues immediately lower, there's invariably a bounce back into the arch formation. That means if you get it about 9 or 906 or 910, it should have a bounce to at least 927 to 933. That's when you can make up other decisions, but you've got a profit. And your risk would be, I would say, if it goes to $9 or something like that, or $9.05, and you nibble on it, you can have a stop of, in a small position, a stop of 15 or 20 cents. It's not a big deal if you're trying to start and establish a position in a stock that should, theoretically, based on everything we're hearing, everything you read about tells you more and more Americans are wanting to buy American products. You're getting Honda and Toyota starting for the first time to get negative reports and consumer reports. Never used to see that. So there's this, and the Hyundai is doing very well, so that's kind of taking away from the Japanese products. I think that the domestics should do well, and yet the price isn't. So your question is a great question, and I'm going to sanction your saying to you, yes, start a small position. And I'll tell you why I say small position. Because if it turns around, if it starts to make higher highs and higher lows, you've got yourself a nice core little nibble position, and that's like your thermometer, your pilot light indicator, and then you can add to it if it makes a peak A and holds nicely above whatever the low is, and then makes a higher high, especially if it's a weekly chart, that'll say, great, now it's turned, and then $10.96, $11, etc., will be the 200-period exponential moving average that Ford has to go to. So I think that's a great question. I wanted to spend a little time on it because I've spent a lot of time. I mean, in my opening call, we did have a little nibble on Ford a while back, and it just didn't work out. We took a tiny loss or maybe a tiny profit, but I said, whoa, this is not working out, and we've stepped back. But I think the double bottom, which it's real close to now, next week it could certainly try that, for a very small risk, the reward is that not only could you get into a position that could turn out to be very successful, but as it moves up, we will know exactly, because the stochastic right now is at 10%. If it's making a W formation, that stochastic will go to about 14 to 15% if Ford can get back to about $10.25. So you've got all the indicators saying this will be your best opportunity. And if it breaks down, if Ford goes to $8 or $7, that'll be something. That'll be telling us about the economy. So that's the weekly chart, and I'm pleased you brought up the weekly chart because the monthly chart has that same pattern, the dreaded H, and there I see no indication yet of a turnaround. And that's why I'm saying just starting a small position, if it gets down, if you and I are not in touch, but it does get there, I think it's a good starter position. And I don't know what you feel about it, but at that point, if you take a small position, taking a 15 to 20 cent, even a 25% loss, I think it's worth it if it's a smaller position.
Okay, and the way I was looking at it is even if it only bounces up to a 9-day EMA, that's a pretty big bounce right there.
That's a very nice percentage bounce, and you could even, you know what, you might find that it just keeps doing that because it's done it before in a larger context. It goes up to resistance, then comes down to the bottom. You've got to buy the bottom, sell the top. You might find it set up a new trading range, and you can get in the 9 area, and you can get out in the 973 or 980 area, and then wait for another pullback, and you can keep doing this until it tells you it's the wrong thing to do. Great plan. Thanks so much for calling. I appreciate that.
Thanks a lot, Basil.
Thank you. That's Chris in San Antonio. We're looking at Ford. And so now let me just do this. I had a question in the den about earlier on about the volatility index, the VIX, because I've been making a big deal about the volatility index. And the volatility index right now is at $17.87. It's only up 37. But now let's go to the 120-minute chart, and I'll show you what we're looking at. For my subscribers, I show them these two charts with 5 stocks on them, indexes. And basically, the left one has the 120-minute chart, and there's the 200-period exponential moving average right at 12,727 for the Dow. If it closes decisively under that, that's a bought at the rally, and it'll go to the low of this candle to the 12,620 to 12,604 level. That's number one. Number two is to bounce from here, it needs to get back very quickly to 12,822. This is a 120-minute Dow chart. The left corner has the VIX index. Well, the VIX has made a leg B, but it's not a great one. For the volatility index to continue this downdraft and to see the 12,400 in the Dow, I suspect that the volatility index needs to break this down inside track. It's called that ChapmanWave inside track, and it needs to go above the green line, and it needs to get to the $19.65 area. If the volatility index Monday or Tuesday goes into the 1960s, there's a real good chance we're going back to the 20s very quickly, and that'll negate all the strength that we've seen, all the selling pressure we've seen in the ChapmanWave Trin gauge. Actually, it's Richard Arm's Trin index, and I use it as with special numbers, that I use only the numbers that are important. And that says that today we've made a high of 295. Yesterday we made a high of 262. That cluster pattern says this is going to be really negative if there isn't a strong counter-trend bounce. A counter-trend bounce is the Dow should rally between 40 to 60 points, the S&P 5 to 6 points. That's all it says, that within 1 or 2 days, no matter how bad, you should be able to get on the downside. When I get a real low reading, and I had a subscriber ask me the question about what the numbers, I'm keeping the numbers to myself. I've spent too much time over the years building up, but let's call it a real low number. That's been very successful in saying the next day there will be a rug pull. This is the exact opposite. The low one says it's immediate. The very next day you've got to get it early in the morning. This one says within 1 to 2 days it should be a rally. So that's it. And then the down S&P you can see on the right here. I'll be back straight after this break. Basil Chapman.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi, folks. Basil Chapman. I had a question just a moment ago about REDEF. That's Rediff.com, an India company, ADS. And the question was about, it's at $4.05. It's a stock that once hit the peak D-top at 17.98 in April of 2011 in the ChapmanWave. Pulled back very sharply, the pattern I call the Eiffel Tower, straight up, straight down. You've got to start a position. This is what I would say. If you've got to start a position, it's real easy for me. If it closes under yesterday's low, it's at 405. If it closes under 390, you might want to be real careful because the next step will be 384. Anywhere it closes below that, and you've got yourself a dreaded H pattern. So what you want to do, and it's holding quite successfully now at 1.94%, but it's only 0.08. So this is what I would say. If you've got to start a position, the close is really important. If it closes towards $3.96, I'd be a little careful because you have to have an up day on Monday to really get this thing going again. But if it manages somehow to close at the high today is 414. If it closes at the open of 410, I'd say that's very nice action, and this is a horrible looking stock, but yes, on the daily the technicals have been really strong, and the prices moved up very nicely from the 350 area to the high of the other day. In 3 days it went, or 4 days it went to 429. That is huge, was a 30-something% gain. So I would say to you, yes, if it's moving higher, that's great, because if it takes out 425, there's definitely a chance of it taking out 429, which would start leg B up. So those are the parameters that I'm looking at right now. That's number one. Number two is the weekly chart needs $4.44. Needs to close above that. It has not closed above that since it broke down January the week of the 27th, when it was in 955. So this is just a counter trend bounce. If you're playing it for a percentage gain, then don't make it a percentage loss. That's all I can say. Be real careful. The technicals say it should move higher. And it should not actually be down 0.08. It should only be down like 0.2 or 0.3 right now if it was going to be going counter to the market. So just watch it carefully. And all I can say is that if it successfully breaks above 429, then what I would do is I'd raise my stop in part of your position and I'd just let it go, because there's a chance that if it does work, it could try for the $4.44 area. That's where it'll hit resistance. So here we've got a few moments. Let me just go through these. Look at the Qs. 1, 2, 3. The Qs made a peak D-top in an up-track resistance area. Look how powerful learning this technique is. That powerful up track, it's like an up channel in this case, and I said that it's fighting two patterns. One is the dreaded H and the other is the up channel. So until the Qs are able to decisively break, there is 63.83. Until the next week or so, if they can't break 65.86, but instead break below the gap low of the 29th of June, 63.21, you've got to be real careful, because if it does that, then all of a sudden I have to change the colors here. That becomes red, that becomes green, and that will be the new up track support level. So that's going to be key over the next 2 weeks. If the Qs start to pull back sharply from here, you remember that the monthly chart has exactly the same thing, a beautiful up channel, and it remains strongly in the up channel, but you're starting to see the stochastic and the MACD weaken. I'm very concerned about this failure of the right shoulder in the Qs. So far I've been concerned, but it has ignored that concern. It's held that up channel really well. So to make it real simple, in July, if the Qs take out 60.04, not even on a close, they just have to get under $60, I'd be saying, whoa, be careful. There could be, in fact, a top of consequence. If, in fact, by the Friday week, the Qs have recovered in the 66.40 to 66.60 area, I say that is great. That's a counter trend move, and we can still go a little higher. Now let's just do, while we've got time, we don't have time. Well, these are the charts. You know exactly what I'm looking at. I told you about the VIX. VIX goes to 19.60 or the 20 area. This market's going down much sharper. If there's a reversal back down on Monday, back into the 1850 to the 17 area, this market's going higher. Hey, make it easy. Thanks for being here. Check out my newsletter front page. You'll see the opening call. That's my service. And stay tuned for Nico and Dave White and then this afternoon's guests.